Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good afternoon. I guess it's afternoon. It's the 29th, and we got the Federal Reserve Open Market Committee statement coming up in 3 minutes. 3 minutes. How are you guys? Anything fun happen while I was gone? I see that they kept buying it. Man, did they keep buying it. Like, when I left, whew, where were we? We were at 29. Oh yeah. Oh yes, that's right. Remember, it was 29.20 was where they were having some resistance, and now since that, almost 20 points higher. Wow, that's a lot. It's pretty big. Oh, then the liquidity is light. Look at the retail traders. The micros have already pretty much. Nobody's in those. That's pretty light liquidity. Did you see that stop run right there? Look at that. That is funny. Okay, that is funny. That one is funny. I am putting that one in the Facebook group. I am putting that one in the Facebook, in the quote cult Facebook group, because that is funny. That was okay. So we gotta pull up Twitter. How are you guys? Oh wait, we should pop this out. We won't have the text to speech reader, unfortunately. U.S. FDA announcement allowing emergency use of Gilead's experimental coronavirus drug remdesivir could come as soon as Wednesday, reports the New York Times. Ding, ding, ding. They're saying I'm going to go down. Move oil out of here. We don't really need to see that. This right here. Cool. All right. Oh, that's weird. My little lines, they're gone. I don't know what was making that ding sound. Well, I'll just add them back on here. All right, so here's the statement. E-mini is moving higher slightly. Treasuries haven't moved quite yet. Wrong says, I think we're going down from here. Well, I tell you what, if the E-mini died here, well, that was a strong sell right there. If the E-mini died here, whoosh, wouldn't that be something else? I need to add something on here. I'm sorry. Hold on a second. There we go. I can see clearly now. Oh, and we need to have on price change set. Make those lines a little thicker for us. Better. Okay. So we're a little bit in an odd area because there's been more volume is traded on the bottom. Oh, we need to change it to on each tick. There's certainly some volume trading at 29.35. Missed the morning stream. That's okay, wrong. Hey, yeah, FOMC statement. That's more important anyways. We're glad to have you either way. U.S. interest rate decision actual 0.25 versus an expected 0.25, and the previous being 0.25. Federal Reserve releases. Okay, here's the changes. Okay, so they removed this state. Well, let's just pull it over here. They removed this bit about using their tools. To support the flow of credit to households and businesses, the Federal Reserve will continue to purchase Treasury securities and agency, residential, and commercial mortgage-backed securities in the amounts needed to support smooth market functioning, thereby fostering effective transmission of monetary policy to broader financial conditions. The open market desk will continue to offer large-scale overnight term repurchase agreement operations. They removed the note about Loretta Mester voting against the action. Really not. Oh, wait, hold up. The coronavirus outbreak is causing tremendous human and economic hardship across the United States and around the world. The virus and measures taken to protect public health are introducing sharp declines in economic activity and a surge in job losses. Weaker demand and substantially lower oil prices are holding down consumer price inflation. The disruptions to economic activity here and abroad have significantly affected financial conditions and have impaired the flow of credit to U.S. households and businesses. A lot of removing stuff from earlier. So nothing like jumps out to me. Nothing jumps out to me about it, but we are a little bit lower. We're probably going to come back into that 29.20 area. I can't tell. Fed also keeping interest on excess reserves at 0.1. And where's my, hold on. Okay. E-mini is going down, and I see again the 60 is getting stronger. That is not what we would have been seeing lately. The euro strength and dollar weakness has been associated with a rise in the stock market. The stock market is falling at the moment. This could change very quickly. Wouldn't read too much into it. I'm not going to read too much into it. I feel a little excited. I want to see something happen. You know what I mean? You know what I mean? Well, they are finding some support here. I definitely am seeing the dollar, at least within these last 5 minutes, go down. Treasury is largely unchanged. Federal Reserve says public health crisis. Wow, First Squawk is just tweeting a ton of stuff. Will weigh heavily on the economy, employment, and inflation in the near term, says health crisis poses considerable risks to the economic outlook over the medium term. We read about that part. We'll monitor incoming information for economic outlook and public health, along with global developments in setting future policy. Says we'll continue buying Treasury agency, residential, and commercial mortgage-backed securities in amounts needed to support the market functioning and effective monetary policy transmission. We'll continue to offer large-scale overnight and term repo operations. Committed to using its full range of tools to support the economy, says coronavirus outbreak is inducing sharp declines in economic activity and a surge in joblessness. Weaker demand and significantly lower oil prices are holding down consumer inflation, says disruptions to economic activity here and abroad have significantly affected financial conditions. Fed vote in favor of policy was unanimous. So pretty significant drop there, actually, in the end. But these sorts of things tend to go back and forth a few times, so let's let it play out. Let's, while we're waiting, try and pull up the Federal Reserve channel. Press conference. Pretty uneventful statement, but who knows what Mr. Powell is going to say in the press conference? It might be like, did you watch Price of Right? No, I don't know what that means. Is that a show or something? Oh, come on, that garage sound was so great. This one is kind of cheesy. Oh, well. Okay, so there was a little bit of a push to try and make it at a buy, and they're rebounding off of it. They're trying, but it's not coming. I think that you'd have to have the volume closer. I thought I heard you hum the Price is Right theme song. No. I haven't seen that show in forever. I remember when I was a kid, you'd watch all the morning cartoons and then the Price is Right was on. Sometimes if you were bored enough, you would sit through it. Bit Trader on SBS. Louis Borlesino. I've never heard of that guy before. Sounds like an important guy, though. The pit trader on SBF. So the treasuries went down. You know what? So Rich in YouTube has some explaining to do. How aggressive that was. Well, it was a little after the news. 5 minutes later, and then they sold. Meanwhile, equities still rotating around this 27 area. 27-ish area. Kind of a bit of a head fake there, I think. And all of the stocks really changed up in there, too. Tick really changed there. When asking Gary, how are you and your border collie doing, is everything you need available at your local stores? Oh man, have you guys had trouble finding food lately? It hasn't been quite as bad as it was when we first went into lockdown, but the stores are still pretty crazy, I think. Oh man, when that happened, they pushed the volatility stop down, and it's like way down there now. I'm gonna turn this down just. So far, my son and husband have both received their stimulus money, while my military retirement account has not received anything. We haven't seen real shortages yet. Yeast is flying off the shelves. Yeah. Well, there was that whole thing with the meat packing plants, right? But I think that they're going to be okay. You do kind of have to wonder, though, how much of what we're seeing is just the effects of the stimulus. Like, I don't know. Today, it started out the week we've been moving up on dollar weakness. Okay. But then today, when we extended up above that high, that was crazy. The music is coming from the FOMC live stream. We can turn it down if you want. It's pretty loud on my headphones. I kind of having a hard time focus there. Are you talking over it? Yeah. Can you hear me? You can hear me just fine, right? Every time I go to the grocery store, the wife's shelf seems bare and empty. It's because they stopped them imports. This is not your typical FOMC action, is it? And they're selling those treasuries again. I wonder why. Oh yeah, you're talking about 2 times your normal volume. Is it pretty loud? I think you might just be seeing your... I'm getting an earthquake. That one was pretty extended. It was probably further away, but it feels like a major earthquake. Still going. A little aftershock there. I could just turn it. If you say that's well, I'll just turn it down even more. Cool to see 24 viewers during a random time. I know, right? Our viewers are so great. Not as many as the F. Look, the FOMC has 3,600. I'll never be as popular as Jerome Powell, guys. Should just give up now. I roll my eyes out of you while I wander my Jungian topology community. Well, I'm torn between wanting to hear myself talk, because it's so much easier to talk when you hear yourself, and not wanting to hear the FOMC music as loudly. So they had a bit of a stop run going up to 31, and then it come back again. This is not like when I remember watching, significant FOMC meetings, and it's been a while since we've had a significant one. Let's say we usually would get things like this, like that, and this is not what we're getting at all. It's just down slightly and a little pullback. I would watch out during the press conference. That could be a doozy. My birds are really screaming a lot today. I don't know what the deal is. Better hold the 26 area? Yeah. Not sure what to make of the action. I mean, it is down. We're down on the hour and since the news. But, excuse me. I'm also just taking a peek over here at the treasuries. It looks like the treasuries might hold off here a bit. They have run into some liquidity at 28. maybe enough to flip the balance a little bit. My downsides of 905, 893, and 882 are in play if we lose 26 area. The FOMC music reminds me of a dentist office or therapy sessions. Both are not good with lots of high. Well, it's like the royalty-free stuff, you know. What is it? What do we call it? It was like Future Garage or something. That first song, it was like a Future Garage song, and then we got to this cheesy stuff. What do you all think about Pence deciding not to wear a mask at the Mayo Clinic? I always was astonished when a politician makes a miscalculation like that. He must have known he would have taken heat. It was probably calculated. I don't know. I think that they want to avoid looking weak and afraid. I really honestly haven't seen anybody say anything about it outside of Reddit, though. Oh, who knows? Of course, they're going to come back 2 weeks from now and somebody at the Mayo Clinic will have died. They'll be like, oh, maybe Mike Pence gave it to him. Mike Pence's actions killed people. You know that's what's going to happen. Instead of not looking weak, he looked rude. Gomer Pence, yeah. The one that you don't like. I don't know if it's really a big deal. It seems like a story that only Democrats care about. Honestly. CNN and MSNBC unmasked their incredulity at him. Incredulity at him? That was like 2 days ago, wasn't it? The U.S. government reports that you had a 2.9 earthquake 19 miles from Tremont in Utah. Oh, I'm surprised. No. It was like at 12:15 our time. Yeah, it was more recent than that we had an earthquake. I'm gonna bet that it was closer to Provo and that it'll be like a 4. Now we're trying to guess earthquake magnitudes in Utah. It's funny. I shouldn't rest on my laurels. I'm going to get like too comfortable with them, and then the big one's gonna come, and I won't react fast enough. You know. I should stay diligent. Okay, so 31. Last pivot was 32. Right? 32. 25. Yawn. Carl Quintina reporting from Bloomberg. The Trump administration is quietly organizing a Manhattan Project-style effort to drastically cut the time needed to develop a coronavirus vaccine, with a goal to have 100 million doses ready by the year's end, according to 2 people familiar with the matter. Ooh, that's good. Moran Squawk's instant analysis is the FOMC pivots to limitless QE until the economy is in line with its mandates. That's what they're saying. I don't know. But we have finally come back to the news price. Not positive on the hour yet, but we have come back to the news price. Let me look. Garland, Utah. No, it's going to be close. It's going to be close. Yeah, there's a section called "Did you feel it?" I wonder what kind of comments that was. Yeah. They have this really cool map where they can show how the different mountain ranges and stuff affects the vibration and where you're more likely to have felt it and not. It's pretty cool. Making it known, coming to the North Korean stage, the long-lost uncle makes his debut. It's North Korean Idol, except no voting off or you go to concentration camps. There's so many people saying that Il was dead, but now they're saying that he's probably just at his resort. I don't know why they keep reporting that. Somebody wants people to believe that he's dead. Man, why am I yawning so much? Okay, so we just had another one of those reversal bars. Kind of turning this 5-minute candle into a shooting star. Now see this right here? This is a decent producing on this track. This track is okay so far. Pretty good sense of the audio spectrum. This is news from North Korean TMZ, really. I think that bass could be a little more aggressive. Like if you're gonna make a bass that prominent, it should be a really, you know. Okay, there's 32 again. I think they should be starting soon. Game of Jong-uns. Up again. They get back to the open of the hour, maybe? Okay. Here we go. About to start. I'll flip it out and bring it down here.
Good afternoon. Thanks for joining us today.
Your microphone is off.
I would like to begin by acknowledging the tragic loss and tremendous hardship that people are experiencing, both here in the United States and around the world. The coronavirus
is that good? Am I
is first and
louder?
foremost
Yeah,
a public health
like
crisis, and the most important response is coming from those in the front lines, in hospitals, emergency services, and care
That is a
facilities.
different podium,
On behalf
right?
of the Federal Reserve, let me express our sincere gratitude to those dedicated individuals who put themselves at risk day after day in service to others and to our nation. The forceful measures that we as a country are taking to control the spread of the virus have brought much of the economy to an abrupt halt. Many businesses have closed, people have been asked to stay home, and basic social interactions are greatly curtailed. People are putting their lives and livelihoods on hold at significant economic and personal cost.
Are we already seeing what Al said was there in an earlier speech? No.
But the burdens are falling
But they
most
release a
heavily on
statement,
those least
and
able
then
to
we have
carry
the
them.
press conference.
It is worth remembering that the measures we are taking to contain the virus represent an investment in our individual and collective health. As a society, we should do everything we can to provide relief to those who are suffering for the public good. While many standard economic statistics have yet to catch up with the reality we're experiencing, it's clear that the effects of on the economy are severe. Millions of workers are losing their jobs. Next week's jobs report is expected to show that the unemployment rate, which was at 50-year lows just 2 months ago, has surged into double digits. Household spending has plummeted as people stay home, and measures of consumer sentiment have fallen precipitously. Hotels, airlines, restaurants, department stores, and other retailers have been particularly hard hit. Manufacturing output fell sharply in March and is likely to drop even more rapidly this month, as many factories have temporarily closed. Overall, economic activity will likely drop at an unprecedented rate in the second quarter. Inflation is also being held down, reflecting weaker demand as well as significantly lower energy prices. Both the depth and the duration of the economic downturn are extraordinarily uncertain and will depend in large part on how quickly the virus is brought under control. The severity of the downturn will also depend on the policy actions taken at all levels of government to cushion the blow and to support the recovery when the public health crisis passes. The Federal Reserve's response is guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. We're also committed to using our full range of tools to support the economy in this challenging time. Last month, we quickly lowered our policy interest rate to near zero. We stated then and again today that we expect to maintain interest rates at this level until we're confident that the economy has weathered recent events and is on track to achieve our maximum employment and price stability goals. Of course, lowering interest rates cannot stop the sharp drop in economic activity caused by closures and other forms of social distancing. And low rates will not effectively spur the economy if those rates do not feed through to broader financial conditions or if households and businesses are unable to get credit. The economic disruptions caused by the virus created tremendous strains in some essential financial markets and have impaired the flow of credit in the economy. Without access to credit, families can be forced to cut back on necessities and could lose their homes. Businesses can be forced to downsize or close, resulting in further losses of jobs and incomes and worsening the downturn. Preserving the flow of credit is thus essential for mitigating the damage to the economy and setting the stage for the recovery. We have been taking broad and forceful actions to these ends. To support the flow of credit to households and businesses, foster smooth market functioning, and promote effective transmission of monetary policy to broader financial
Treasuries are still falling
we have been purchasing
here.
large amounts of Treasury and agency mortgage-backed securities. The markets for these securities play a critical role in the economy, and they came under great stress last month as the scale of economic disruption became clearer and as investors clamored for liquidity. Our purchases have helped market conditions improve substantially in recent weeks. In light of this improvement, we have slowed our pace of purchases. We will continue our purchases of Treasury and agency mortgage-backed securities as needed. While the primary purpose of these securities purchases is to preserve smooth market functioning and effective policy transmission, the purchases will also foster more accommodative financial conditions. We are also undertaking programs to provide stability to the financial system and to more directly support the flow of credit in the economy, for households, for businesses of all sizes, and for state and local governments. These programs benefit the economy by providing financing where it is not otherwise available. In addition, by serving as a backstop to key credit markets, the programs can improve market functioning by increasing the willingness of private lenders to extend credit.
$50K, it is about
Many of these programs
That's
rely
$7
on
trillion
emergency
less
lending
than the
powers that
current
are
Federal
available
Reserve
only in very
balance sheet.
unusual
That's-
circumstances, such as those we find ourselves in today. We are deploying these lending powers to an unprecedented extent, enabled in large part by the financial backing and support from Congress and the Treasury. We will continue to use these powers forcefully, proactively, and aggressively until we're confident that we are solidly on the road to recovery. I would stress that these are lending powers and not spending powers. The Fed cannot grant money to particular beneficiaries. We can only make loans to solvent entities with the expectation that the loans will be repaid. Many borrowers will benefit from our programs, as will the overall economy. But for many others, getting a loan that may be difficult to repay may not be the answer. In these cases, direct fiscal support may be needed. Elected officials have the power to tax and spend, and to make decisions about where we, as a society, should direct our collective resources. The CARES Act and other legislation provide direct help to people, businesses, and communities. This direct support can make a critical difference, not just in helping families and businesses in a time of need, but also in limiting long-lasting damage to our economy.
What would you do with a
At the
windfall
Fed,
of 50K?
we're doing all we can to help American families and businesses weather this difficult period. When the spread of the virus is under control, businesses will reopen and people will come back to work. We will continue to use our tools to assure that the recovery, when it comes, will be as robust as possible. Thank you, and I'll be glad to take your questions.
Okay. Oh, it is a
Gina Smolik.
Zoom conference. Look at
Thanks
this.
for taking our question.
That is, oh my.
Congress have cut rates to zero. You're buying up huge quantities of government debt. I guess the question is, what more can you realistically do to help the economy? And where do you see a need for Congress to step in?
So let me say that we're committed to using our full range of tools to support the economy in this challenging time. We're going to use them, as I mentioned, forcefully,
Full
proactively,
range.
and aggressively until we're confident that we're solidly on the road to recovery.
I would definitely buy an alpaca
And also
farm
to
with
assure that recovery,
$50,000.
when it comes, will be as robust as possible. As long as needed, we'll use them. And
Actually, I'd probably just
I
pay
would
off
just
the
say we have a number of dimensions on which we can still provide support to the economy. As you know, our credit policies are not subject to a specific dollar limit. They can be expanded as appropriate, and we can do new ones. So we can continue to be part of the answer. Will
Okay,
there
it
be a
seems
need
like
to do
markets
more,
like
though?
that.
I think the answer to that will be yes. I would say Congress has also reacted quite aggressively and strongly with the CARES Act and other laws, several other laws, and that's appropriate. With enhanced unemployment insurance and the Paycheck Protection Program, we've seen an extraordinary, historically large reaction. But I would say that it may well be the case that the economy will need more support from all of us if the recovery is to be a robust one.
Nick Timrose.
Thanks, Chair Powell. Nick Timrose of the Wall Street Journal. I want to follow up on Gina's question and ask what specifically do you think elected officials should consider in order to help return or hasten a stronger return to full employment? And what policy tools did you
PK,
discuss at your
what
meeting
kind of
today
stimulus do you
that
think
might
is the
be
most
used
effective?
to stop
That's what
a
he's asking.
deflationary spiral?
So let me start. I'll take the questions in the order you gave them. So, in terms of, if I can say, legislative priorities, we're not responsible for fiscal policy. Those will be decisions for Congress to make. But I would
That's the
say that
question.
policies that protect workers, businesses, and households from avoidable insolvency, that keep businesses going, so that they're able to produce goods and to either hold on to their employees or quickly rehire them. Those are going to be key policies. They'll come with a hefty price tag, but we would come out of this event eventually with a stronger economy and with less long-run damage to the economy. So that's a key thing that really Congress could do over time. In terms of what we can do, I mentioned we have our credit facilities are wide open. We can do more on that front. In addition, we've had extensive discussions, as I've mentioned, done a lot of thinking about what monetary policy might look like in coming months over a range of potential scenarios for the economy. We do think that our policy stance today is right where it should be for now. As you know, we cut rates to the effective lower bound. And we've said that we'll keep them there until we're confident that the economy has weathered the effects of the outbreak and is on track to achieve our goals. With asset purchases, we're continuing to purchase Treasury securities and agency MBS in the amounts needed to support smooth market functioning. So we're doing those things, and
Yes, it's only 27
I would say that we'll
points
continue to
above
use our tools
29.63.
as needs be.
Not today. 20
Steve
points
Leisman.
is too much.
Mr. Chairman, question, Steve Leisman with CNBC. I've got two questions here. First of all, why aren't you announcing or conducting a specific quantitative easing program? And maybe you could explain what the context is now of the purchases that will be made and the amounts that are
That's
to
a
come.
great question.
The second question I have is the
Get
Federal
ready,
Reserve
every
really
four-letter
taking enough risk to
acronym
help
is going to be created by
households
the
and
Fed.
businesses here in that?
Seen this before
You
in this
just said
reputable
that
pattern in the
the
playbook of
programs
central
that are out
bankers
there may
loving
be
it.
best for those who are able to
Yeah.
repay loans. But so don't you have a series of programs essentially lending only those able to repay, which is essentially helping those who may need it the least? Thank you.
So let me say again, in terms of asset purchases and other measures, we do think our policy stance is appropriate now. We've had discussions, as I've mentioned, over time and done quite a bit of thinking about what we might do in the future. We think for now our policy stance is appropriate. We're not going to change it now. And we're really waiting to see more from the economy. There are a range of potential paths the economy could be on. And I think as the time approaches then we'll address your first question, which is about asset purchases. But that's not something we're doing today. It's something that we have talked about, and for now we like our current policy stance. In terms of risk, we operate under the laws that Congress passes. And there are a number of aspects under Section 13.3, and you can see that they've permitted us to, I think, move very quickly.
Yeah, I think you'd have to say
and
the
move
26
into areas where we've never been before,
long
and
before
do
the
so
press conference.
quite aggressively. So I think we're going places and
He hasn't said anything the
providing
market
help in
hates
places where
yet.
we never have, and I'm glad that we are. I think it's appropriate that we are. Nonetheless, these are lending powers, and if you read Section 13.3 of the Dodd-Frank Act, or the Federal Reserve Act, and I know you have, it does require that we be secured to our satisfaction, and we can't lend to insolvent companies. It's clear these are lending powers, and we are ultimately bound to implement the laws that Congress gives us. We do not make grants. We can't make grants, and the reason I raised that in my remarks is that I just want to be clear on that. We can do what we can do, and we will do it to the absolute limit of those powers. We'll keep at it, and I just want people to know that we will be at it with the legal authorities that we have until we get through this thing. We will keep using our authorities. But there are authorities that we don't have, and there may be a need for those authorities to be used as well as ours.
Okay.
Heather Long.
Hi, Chair Powell. It's Heather Long from the Washington Post. I have two questions for you, both on timing. The first, do you plan to launch the corporate credit facility and the Main Street lending facilities in May or early May? Anything you can give us a sense on timing? And the second, in the statement you refer today, the FOMC refers today to a lot of medium-term risks from the pandemic. That sounds like you all think this is going to be a long recovery, a long road to recovery. Can you give any more guidance on how you all see this recovery taking shape? Thanks.
Sure. So in terms of those facilities, the corporate credit facilities are near being finalized and will be operating, I would say, soon, fairly soon. Main Street facility is, we're close to announcing, to issuing a new term sheet. As you know, we put out a term sheet for comment a while back, and we got a couple thousand comments. We've carefully studied them. We've tried to reflect those in what we're doing now. I think with Main Street, there'll be at least a couple of different kinds of lending going on there. This is a broad area of the economy with many different kinds of credit needs, so we're going to keep at that for some time, I think, adding in sectors and lending products. So I think
I'm
we'll be
feeling awfully
probably
sleepy.
be continuing to
I
work and expand
apologize.
Main Street for some time, but it won't be done quite as quickly. But the first part of that, I
Do you
think, will
notice
be
a
done
bond
fairly
manager is
quickly.
not allowed to ask the Federal
In
Reserve
terms of
Chairman
our
a question?
statement, so what we said
Only
was that
economists, journalists are
I'll just
allowed.
read the sentence. It says, ongoing public health crisis will weigh heavily on economic
Oh
activity.
yeah, what
employment,
would
and inflation
Jeffrey
in the near
Gunlach
term,
ask him?
and poses considerable risks to the economic outlook
What
over
would
the
Jeff
medium
ask
term.
him?
So the medium, what we meant by that over the medium term. So obviously, what we're talking about is not right now in the very near term. It's between now and the long term. So the next year or so. And I would point to a couple of risks to the outlook that what we were thinking of. First is just the virus. How long will it take to get it under control? Will there be additional outbreaks? Will there be drugs that can either treat it or a vaccine of some kind? So all of that is very much shrouded in uncertainty. The second issue, and this is a very substantial one, is just the possibility of damage to the productive capacity of the economy through a couple of channels. The first is just workers who, if one is unemployed for an extended period, that person can lose the skills that are needed.
You're
can lose
working
touch
from
with
home
the
now.
labor
I just
force,
realized it's the middle of
and
your day,
have
and mind you
difficulty
have
restarting
something
his or her
to drink
career.
up, you perk up,
So
or will there be time
that's
for
a
a nap
feature
after
of deep
this?
and long recessions, and that's something we've got to watch out for. Another is just businesses.
Maybe I should go get some
Thousands
Gatorade.
of
I don't know why I'm
great
feeling
medium and
sleepy.
small-sized businesses that we have all over the country.
I think it's just kind of
they're
warm in
worth
this
so
room
much more to the economy than the
at the
sum
moment.
of their net assets. They contain,
But I
they're
have been
job
working from
creators. They're
home.
really important. And if we see an unnecessary,
Who knows how long that'll last? It
unnecessary
might be a
insolvencies,
whole
wave
year.
of those, that could be damaging to the performance of the economy over time. So the good news is that we have policies, as I mentioned in my remarks, we have policies that can address those things, but not perfectly. So that's another risk. The third thing I would point to is just the global dimension. This is a very global phenomenon, and we're seeing economic data from around the globe, which is very, very negative, and that too can weigh on U.S. economic performance over time.
Scott
I would say just on the
Last
U.S.
week, herd immunity
on the U.S.
was
economy,
questionable, and neither hydrochloroquine nor
the things you can
remdesivir
say, one can
were
say.
looking
The
good.
first
Today,
is
the
that
reverse. Who
in the
said
near term, we're going to
everyone
see,
who said we should use data and make decisions
significant
has to tell
declines
us
in economic
which
activity,
week the data
significant
is
declines
accurate.
in employment and increases in unemployment. We're going to see that as a consequence of the virus and the measures we're taking to protect ourselves from it. The next phases are more uncertain, highly uncertain, but we will go through a phase starting fairly soon where we begin to reopen the economy, and probably the economic activity will pick up as consumer spending picks up. Consumer spending, as I mentioned, has gone down quite a lot. It'll begin to pick up as people start to return to their normal patterns of spending. But the chances are that it won't go right back to where we were, because people will, until they're confident that the virus is well and truly under control, then they will be somewhat probably reluctant to undertake certain kinds of activity. So it may take some time for us to get back. It probably will take some time for us to get back to a more normal level of unemployment and ultimately to maximum employment.
Okay, James Politi.
Thanks, Chair Powell. You didn't firm up your guidance on, this is James Politi from the Financial Times. You didn't firm up your guidance on interest rates at this meeting. And given the risks that you just outlined, under what circumstances would you strengthen the Fed's commitment to keep rates at the lower bound? And is there any danger to delaying that pledge? And on the credit facilities, what kind of demand are you expecting for the programs that were set up under the CARES Act? And are you expecting them to rapidly reach capacity like the PPP plan did?
Okay, so on the first, as I mentioned, we moved very quickly, very aggressively. We were the first to return to the effective lower bound where we are now. We got there essentially right away, and we think that's the right place to be. We think if you look at surveys, you look at market pricing, the market expects us to be there for a good while, and that's appropriate. So, it's not.
So
as
the
though
treasuries
market
have
is
no reason
pricing
to
in
move. Did you
a
hear that,
near-term lift-off
treasuries?
or anything
So
like
stop
that.
selling.
And let me just say, we're not be in any hurry to withdraw these measures or to lift off. We're going to wait until we're quite confident that the economy is well on the road to recovery. So we see our current stance and our current guidance, and I would say the same thing about asset purchases. We see them as appropriate. I've also mentioned now a couple times that we have done a lot of thinking about what monetary policy might look like over coming months, and that would depend on where we are
speculators
in a
that have
range
spoken,
of potential.
Well, they
economic
pushed down the treasuries
so
pretty
we
decently
were
there.
thinking about that all the time.
We were at
but right
139.30 before all
for
this.
For now, we think our current stance is appropriate, so we made no change in it today. Second question was
No, there was a second question.
so the thing about our facilities is Treasury still has plenty of equity. So we've said that if demand for our facilities is greater than we've estimated, then we'll expand them, and we have the ability to do that. So it won't be the way the Paycheck Protection Program is, where there's a specific amount appropriated for it, and then there's no more money. That will be unlikely to happen here unless we exhaust Treasury's equity, and we're a long way from doing that. The second thing I would say is, and you've all seen this, is when we announce these facilities, and I mentioned this in my remarks, it's not just the actual lending we do, we build confidence in the market. And private market participants come in, and many companies that would have had to come to the Fed have now been able to finance themselves privately since we announced the initial term sheet on these facilities. So that's a good thing. Companies are out there financing, they're out there raising liquidity. We haven't made any corporate loans in those facilities. We've made the short-term money market loans, but we haven't made any of them. And yet there's a tremendous amount of financing going on, and that's a good thing. So for that reason, the ultimate demand for the facilities is quite difficult to predict, because there is this announcement effect that really gets the market functioning again. Of course, we have to follow through, though, and we will follow through to validate that announcement effect.
Okay, Howard Schneider.
Oh, hi, Chair Powell, and thanks for doing this. I wanted to get you a little more expansion on the timing of recovery and the connection between the health response. You said earlier, I think, that you thought the second half of the year could see a pretty robust rebound. Is that now out of the question? And do you think a steady recovery is really possible until a vaccine's developed, given the patchwork of measures we see taken around the states? Is that going to really lead us to a steady path out, absent a vaccine?
As you know, economic forecasts are always uncertain. Today, they're unusually uncertain, and that's really because so much of the performance of the economy depends on the path of the virus and the success of the measures we take to control it, our success in reopening the economy, and also the time it takes to develop new drugs. And our tools, the things that we do, don't affect any of those things. We're not experts on those things either, but what the experts tell us is that the outcomes are highly uncertain. So this is an unusually new kind of uncertainty added on top of our regular uncertainty. But I will say I think there are a few things you can say about the path ahead. First, this time now is going to be a time of sharp contraction in economic activity.
Let's see here. While I went away,
unemployment.
Took a bit of a dive there, huh?
Personal consumption expenditures have declined sharply. Business investment as well. Unemployment moved up. We're going to see economic data for the second quarter that's worse than any data we've seen for the economy. And they're a direct consequence of the disease and the measures that we're taking to protect ourselves from it. So then we'll enter this new phase, and we're just beginning to maybe do that, where we will formal measures that require social distancing will be rolled back gradually and at different paces in different parts of the country. And in time, during this period, the economy will begin to recover. People will come out of their homes, start to spend again. We'll see unemployment go down. We'll see economic activity pick up. And when will that be? It's very hard to say. But let's just say for this purpose that it's in
now
the third
barely
quarter.
pull all dayers.
So as I mentioned earlier, that
I
could
always
be a
fall asleep
fairly
in meetings, man.
a large increase. Given the size of the fall, the increase could also be substantially large, although it's unlikely that it would bring us quickly all the way back to pre-crisis levels. Of course, this is the period as well that carries the risk of new outbreaks of the virus, something we really want to avoid. I think then, after that period, at some point you will have, the kind of formal social distancing measures will be gone, but you'll still be left with probably a level of caution on the part of people who will worry, and probably keep worrying for some time. You would think that behavior will change as people.
So there was some real absorption.
The sooner we get the
in
virus under control, the sooner people can regain that confidence and
Look at this at 1:39
and regain their economic activity. I think trying to be really precise about when that might happen and what the numbers might look like is, I think it's very tough to do that.
Okay, Steve Matthews.
How is the baby doing?
Steve Matthews with Bloomberg.
He didn't sleep too well last night. Past few nights, I don't think. He really doesn't like sleeping.
There's been a broadening out of job gains with marginalized workers. People have been left out of the recovery over the.
I really want to
period,
sell 139.
Finally making job gains, and particularly minorities, but also many other workers. Do you worry that this recession is going to fall hardest on those workers who struggled and just got job gains in the last year or two, and that it may take years from now before there are opportunities for them again?
Yes, that's exactly what I worry about. So unemployment has tended to go up much faster for minorities and for others who tend to be at the low end of the income spectrum, and it tends to come down faster as well, but it tends to go up faster and be much, much higher. And we were in a place only 2 months ago. We were well into beginning the second half of the 11th year is where we were, and every reason to think that it was ongoing. We were hearing from minority, low and moderate income and minority communities that this was the best labor market they'd seen in their lifetime. All the data supported that as well. And it is heartbreaking, frankly, to see that all threatened now. All the more need for our urgent response, and also that of Congress, which has been urgent and large, and to do what we can to avoid longer run damage to the economy, which is what I mentioned earlier. This is an exogenous event that it happened to us. It wasn't because there was something wrong with the economy.
I'm liking that now.
I think it is important that we do everything we can to avoid that longer run damage and try to get back to where we were, because I do very much have that concern. I think everyone is suffering here, but I think those who are least able to bear it are the ones who are losing their jobs and losing their incomes and have little cushion to protect them in times like that. So yes, that's a very big concern.
Victoria.
Well, I wanted to do it. I should have done it.
Victoria Guido with Politico.
Look at that right there.
The Paycheck Protection Program has experienced some logistical problems because of the speed at which all of this is happening. For the Main Street lending facility, which will also work through banks, what lessons are you taking away from that? And then more broadly, you mentioned earlier this year that the federal debt was on an unsustainable path. And I was just wondering, for Republicans that are starting to get worried about how much fiscal spending they're having to do in this crisis, whether that should be a concern for them.
So a couple of things. This is different from the PPP, the Paycheck Protection Program, in two ways. One is these are not grants; these are loans. So I don't know that the demand
forgivable
will be
loans
as strong as it has been for the PPP. I don't know that, but and the second thing is we won't run out of money. It's not a limited pot, so there won't be this incentive to try to get there first and that sort of thing. So I'm hopeful we will very much try to learn as much as possible from that facility and from all the other ones too. We have a lot to learn here, so we'll certainly be trying to do that. In terms of fiscal concerns, so for many years I've been before the Fed. I have long time been an advocate for the need for the United States to return to a sustainable path from a fiscal perspective at the federal level. We have not been on such a path for some time, which means that the debt is growing faster than the economy. This is not the time to act on those concerns. This is the time to use the great fiscal power of the United States to do what we can to support the economy and try to get through this with as little damage to the longer run productive capacity of the economy as possible. The time will come again, and reasonably soon, I think, where we can.
That one didn't work out at all.
About a
That was a
long-term way to get our fiscal house in order, and we absolutely need to do that. But this is not the time to be, in my personal view, this is not the time to let that concern, which is a very serious concern, but to let that get in the way of us winning this battle, really.
Okay, Edward Lawrence.
Oh, yeah. Thank you, Mr. Chairman. Edward Lawrence from Fox Business Network. Now, given the amount of stimulus on the fiscal side and monetary policy side, how much weight do you give to finding a vaccine from clearing that uncertainty you talked about around treatment and whatnot, for the Federal Reserve pulling back on some of the Fed's actions and raising the rates from the zero lower bound? Also, when does that Main Street lending facility get deployed? Because you talked about soon, some businesses are in need now. Thank you.
So we don't, we're not in a position to make, a reliable assessment of when a vaccine or a therapeutic drug would be ready. And so we're not going to set our policies based on our estimate of that. We're going to just provide the support that we can with the tools that we have, and we're going to keep doing that until the recovery is well underway. In terms of Main Street, so you know the story. We put out a term sheet. We got a lot of comments. We took those very much to heart. We spent a great deal of time here. It's a challenging space because it's many different kinds of borrowers. They have different needs, different sizes of companies, and so we're as I mentioned, we're very close to announcing
like
a new term sheet, which will then become operative fairly quickly. My guess is, though, that we'll keep looking to add products and add different kinds of borrowers to that as we go, and we're well aware of the importance of doing it as quickly as possible. We're very much in touch with the urgency of that need.
Okay, Don Lee.
Chair Powell, it's Don Lee from the LA Times. Just wanted to follow up on the question on the labor market. I know you said that it's highly uncertain, but there are analysts who think that we'll have very high unemployment until even the end of next year, as high as 9%. And at this point, can you just talk a little bit more about what you see as the path of employment in the coming months and into next year?
Sure. So unemployment is going to
reacting
go
to Powell saying this is not the time to be concerned about
high number
federal
in
debt.
the second quarter. Uncertain what the number will be. When
all the conspiracy theorists are going to
because so much economic activity has been shuttered really as we take social distancing measures. So sometime fairly soon here, and probably gradually and at different paces at different parts of the country, we'll see the social distancing measures rolled back. People will begin to spend more money. It's really consumer spending has fallen precipitously. And once that starts to happen, people will get hired back and unemployment will go back down. I don't think it'll get anywhere near the historically low levels that we had in as recently as February, 3.5%. I think it will take some time for that to happen, for us to get back to anything that resembles maximum employment. But I mean, the main thing we want to get back on that road. We want to get that recovery going and get people back to work as fast as we can.
Big bid disappear.
Not faster than we can, but as fast as we can. And the main thing is to get into that stage where the economy's healing, where we have the disease under control, where we don't take too much risk of second and third waves and that sort of thing, and get people back to work. And it's again the path of it is highly uncertain, but we will be there with our tools, supporting the economy and supporting that recovery.
Scott Horsley.
Thanks, Mr. Chairman. After the financial crisis, banks were instructed to up their capital so they could weather an economic shock. What kind of steps do you think we need to take for the economy writ large to make it more resilient to this kind of shock?
Can you just say that part? You're a little bit low volume.
Yes. What kind of steps could we take to help the economy as a whole be more resilient to this kind of exogenous shock?
It's an extraordinary shock, unlike anything certainly that's happened in my lifetime. And a couple things come to mind. I think the time will come for a careful assessment of the answers to those questions. It's early to be asking them. We're still putting out the fire. We're still trying to win. And I think we'll be at that for a while.
Something crazy happening there in the
but
US.
I'd point to a couple of directions. We worked hard to strengthen the banks, much higher levels of capital, liquidity, a far greater sense of what the risks are they're running and how to manage them. So the breakdowns that we've seen in market function have really been in the capital markets. And I wouldn't rush in with prudential regulation into the capital markets, but I think, and we did plenty of things, tri-party, we did a lot of reform in the capital markets, money market reform, tri-party repo reform, central clearing, all these important things. But there will no doubt be, with this, the size and force of this shock will no doubt reveal weaknesses in the financial architecture, and we'll have to go to work on those. I also think it tells you the importance of getting your fiscal house in order. The U.S. really hadn't gotten back to where we needed to get on fiscal policy, and so we have an already high level of debt to GDP and rising quickly when this shock arrived. Now we have the fiscal capacity to deal with it, I believe. But we will need to, ideally you would go into an unexpected shock like this with a much stronger fiscal posture.
Mike McKee.
Mr. Chairman, given the demand shock and the drop in oil prices, do you anticipate that we might see any kind of deflation, even for a very short period, that would require a Fed response? If we get a negative print on CPI or PCE, how should people think about that? And second question, there is a disconnect, it appears, between the markets and the economic outlook right now. And I know you've said that this isn't the time
I think
to worry
it's
about
kind of
moral
funny
hazard,
that I have a
but
better
do you
home
worry with the size of
broadcasting setup
stimulus that
than
you and
the news anchors
Congress are
at
putting
professional
into
networks.
the economy, there could be financial stability problems as this goes along?
In terms of inflation, we think that inflation is very closely and strongly related to inflation expectations. And during the global financial crisis, there was a concern that we might see deflation, but it didn't happen. Inflation tended to move down a little bit, as it will when demand is weak. But inflation expectations did not move strongly down here in the United States. They have in other places in the world, though, over the past 25 years. There's been downward pressure on inflation really for several decades now. So I would say as long as inflation expectations remain anchored, then we shouldn't see deflation. And the Federal Reserve is strongly committed to maintaining 2% inflation over time. So we'll be there to work on that. I think you asked really about headline inflation. If low energy prices, very low energy prices, were to drop headline inflation negative, I would hope that people would see through that, and we'll be monitoring it very carefully. Would see through it though, and look to core, which is a better predictor of future inflation. So needless to say, we'll be keeping very close track of that. In terms of the markets, our concern is that they be working. We're not focused on the level of asset prices in particular. It's just markets are trying to price in something that is so uncertain as to be unknowable, which is the path of this virus globally and its effect on the economy. And that's very, very hard to do. That's why you see volatility the way it's been, market reacting to things with a lot of volatility. But, what we're trying to assure really is that the market is working. The market is assessing risks. Lenders are lending, borrowers are borrowing, asset prices are moving in response to events. That is really important for everybody, including the most vulnerable among us, because if markets stop working and credit stops flowing, then that's when you see very sharp negative, even more negative economic outcomes. So, and I think our measures have supported market function pretty well. We're going to stay very carefully monitoring that, but I think it's been good to see markets working again. Particularly the flow of credit in the economy has been a positive thing as businesses have been able to build up their liquidity buffers and households have been able to be home. People have been home, concerned about their jobs, but they're not concerned about the financial system collapsing as they were in 2008 and 9.
Okay, Chris from the AP.
Hi, Chair Powell. Chris Regaver at AP. Thank you. I guess I had two questions. I wanted to start on the unemployment picture and nail down a little bit how you see things going from here. You did talk about potential loss of skills over time. So are you worried about structural changes in job markets that would keep unemployment high and therefore potentially beyond the ability of the Fed to do anything about, which is something that was debated, as you know, after the last recession. And then eventually, of course, the unemployment rate did go lower than people thought. Second question is just on the money from Treasury, the $454 billion. It sounds like you want to keep that in reserve for programs that have high demand, such as the Main Street program. Are you willing to use that to backstop, say, a program that is having more losses? What's your tolerance for loss among that $454 billion? Thank you.
Bit of an iceberg there, 14 quarter in the 5 year.
So in terms of the labor market, the risk of damage to people's skills and their careers and their lives is a function of time to some extent. So the longer one is unemployed, the harder it gets, I think, and we've probably all seen this in our lives, harder it is to get back into the workforce and get back to where you were, if you ever do get back to where you were. So, and longer and deeper downturns have left more of a mark generally in that dimension with the labor force. And so that's why, as I mentioned, that's why the urgency in doing what we can to prevent that longer run damage. It doesn't have to be that way. We won't be able to limit all of it, but we do have the tools to do what we can to keep people in touch with the labor force and working, and also out of insolvency too. It doesn't seem fair that people should lose everything they have, including their homes, over this. So, nonetheless, there will be some of that, but we do have some tools to ameliorate that. In terms of the the money, the $454 billion. It's a couple things. First, the Treasury Secretary really has authority over that, right?
Audio engineer, they're a little too heavy on the volume control.
But I do think we're clearly moving into areas where there is more risk than there has been in the past.
Yeah. That's definitely why the market's up today, I
do.
think.
This is a
I don't think it makes a ton
time.
of sense, but whatever.
And so, but in terms of the way to think about that money, I think that's really a question for the Treasury Department. We set up the facilities and we work very, very closely and successfully and collaboratively with the Treasury. on this, but that particular aspect of it falls more to the secretary.
Okay, we'll go to Nancy Marshall-Genzer for the last question.
And Nancy Marshall-Genzer with Marketplace. Chair Powell, I'm wondering what you would say to savers who are hurt by very low interest rates and maybe going into investments, maybe in the stock market, that aren't so great for them. And also, I'm wondering if you can give us any more of a clue as to how long you think we're going to have interest rates near zero.
So we think that low interest rates affect the economy through a number of channels in a positive way. Lower interest rates support economic activity through channels that we, overall, through channels that we understand reasonably well. They make it cheaper to borrow. They make they drive in, your costs of borrowing down. They do raise asset prices, including the value of your home. If your saver owns a home or has a 401k, your saver will benefit from that. But for people who are really just relying on their bank savings account earnings, this is that's you're not going to benefit from low interest rates. But we have to look out for the overall economy. Low interest rates support employment; they support economic activity, and those are our mandates. And I think for the overall good of the economy, low interest rates are a good thing. And it's not to say they're good for every single person, but that shouldn't stop us from doing what we think is good for the whole. In terms of how low, I really don't want to speculate. We will turn to questions like that soon enough. But in terms of how long we'll stay and under what conditions we'll stay at the effective lower bound, those are just exactly the things we're thinking about. Right now, we like the place we are. We've said that we'll keep our rates where they are until we're confident that the economy has weathered the effects of the outbreak and is on track to achieve our goals. So that's where we are. We're not changing that guidance today. But it'll be. That means we're going to be very patient. That means we're not going to be in any hurry to move rates up.
Thank you very much.
Thanks.
Okay. So that was an interesting FOMC. There was a couple of odd moves in that. Overall, didn't see anything too significant. I don't 100% understand the huge sell. I do see some reason for them to sell now. At least they're at the offer. We'll see. They might just blow through me. It's okay. I should expect to screw it up a couple of times. I haven't put a trade in the 10-year in a while. The E-mini is right up there, 29.40. I mean, they could go a lot. They could still go further in ES, frankly. But I am really starting to wonder what are the upside limits here, because 3,000 is just around the corner, and I really don't think that we should be at 3,000 if we just experienced a 15% drop in yearly GDP. Like, come on. If it was just 5% in quarter one, like quarter two is going to be devastating. And they're creeping up there in ES. Slowly but surely. Okay. They didn't quite breach the high yet. Hmm. 5 years seems to be the influencer again today. Forex Live puts a picture, short version of the FOMC that put is in play. I feel like that was like a pretty uneventful press conference in the end. There's ES is up for the new high. There he takes it. And there's 45. Michael going, yep, it was a big nothing sandwich, and RJ Will agreeing with me too. It was a big nothing sandwich. I think that it's funny. It seems to me that the big piece of news was about the therapeutic treatment for coronavirus and not the Federal Reserve. Which is funny because last week they told us that it wasn't that promising. And now they're saying it's great. Like, I don't know, man. I don't know, man. How can you have a 5% in the first quarter and who knows how much in the second quarter, and we can be literally right where we were before all this shit happened? It boggles my mind. It makes zero sense. It really makes zero sense, right? Feel like I'm taking crazy pills here. Cannot deny, like when I look at that price action in ES, it's like, how do you sell that, man? You can't sell that. Hell no. You want to get in front of that? Jeffrey, what were you thinking? Seemed like a reasonable trade at the time that he took it, but don't look so good today, does it, guys? They're going to keep trading up until they squeeze him out, and then he's going to get on CNBC and he's going to say, I was wrong, and then they're going to start selling. That's what's going to happen. Okay, well, that was an okay downtick. Thank you. No, they're not going to trade into me. See, that was a terrible downtick. Hardly anything stacked on the offer. Nobody bought it, but man. Well, a robot finally did take it. It's just going and going and going. I mean, the other target is way too far away for them to get in the last 30 minutes. There's no way. They move up to 29.70 in 30 minutes. It seems a little unlikely. Oh my gosh. The air conditioning turned on and it feels amazing. I can just feel it mixing with this air and washing over me. It feels good. According to Euro-dollar futures, no rate hikes all the way out to 2022 wouldn't. Yeah, that wouldn't surprise me. Buying stocks, dumping bonds, right? Yeah, I mean, that's what I was kind of banking on. But look, they're not really moving the bonds a whole lot. But they're just buying the hell out of those equities, man. I'm a little mad that I didn't get filled down there. And the way that bid comes back, just like nothing. All those offers pulled to get back up there. That sucks. E-mini going. They're having a little bit of trouble there, I think. Maybe somebody's taking that up because they think that they're going to flip temporarily. I think that a small pullback at the very least would make a bit of sense before the close. Hmm. No one pulled two. Okay. That is not one short in the E-mini that I would have found reliable. Hmm. Both sides are pulling. Curious. Well, they didn't do it that time. I think that's the first time I've seen them hit into a price for a bit and not immediately tick. Okay. Jeez. Yes, ready to go again? Already? And it's still the same thing at 139 though. And nobody's willing to stick their neck out at 139 even. I keep minimizing you guys. I'm sorry. Buying stocks, selling bonds. Hmm. Toyota Motors delays restart of North American production to week of a May 11th in statement. Venezuela asks Bank of England to sell part of its gold to the United Nations for coronavirus relief. Hmm. Okay. Bit of a drop there in ES. Hmm. I was recovering that pretty well. I'm just thinking about yesterday. And yesterday seemed so negative to me. Like it was really like a real reversal. Played out almost exactly the way that I saw it going through. Pretty heavy selling into the close. And now I think about today, and today has been a really positive day. It started out bad, but then they bought, and they bought pretty aggressively. And although the price that they reached, 29.45, was pretty much where our target was, the way that they got there shows real strength, I think. But the difference is that yesterday it was in line with the larger things that I'm seeing, and today it's not. So we had an extremely negative day and now an extremely positive day, and I'm wondering how connected this really is to what the economy is really doing. Because really, are we going to go to 3,000? Can you remember last fall when we were like, when 3,000 on the S&P 500 was a big deal? I just, man, can't compute that. Hmm. Microsoft, Facebook, Tesla, and Qualcomm all improving ahead of their earnings due after the market closes. Okay. Seeing a lot of stuff on Twitter about Justin Amash for some reason. Like, why would anybody... Okay. Okay, so that was a much better downtick than the last time that we ticked 139 even. 600 placed on the offer. 700. Nobody's traded into 31.5, but I think that I'm going to get my fill now. I'm trying to clear him. Still nobody's hit it. Okay, so some did hit it. Maybe a little flippy flip. Yeah, hey. Hey. So when they pull and you find out you're at the back of the queue, that's something that always makes me a little uncomfortable. Seth, haven't you recognized how the market participants front run the news, earnings, the Fed, Treasury, good or bad? They telegraph this all the time for sure. Yeah, I didn't realize that it was those earnings that were about to come out. Probably they are buying up on the earnings for those companies. Still, I don't know. I guess this comes back to that thought we had yesterday, which was like, it's possible that the overall economy can just be absolute trash, but that the earnings of large companies are still intact. Because especially companies like Facebook and Google, like these big companies, and not even tech companies like Walmart. Walmart wasn't forced to close down. Walmart's doing great. Well, I find it curious that as liberally as they traded around the 139, 31.5 area last time that we were here, that they're being so stingy with it now. Almost. And no meat shortage thanks to Trump's executive order. Yeah, that's true. Come on, hit me. Thank you. Oh, they do clear it when they do it. This would be funny if they push down further, but it looks like the bid is decided that he's going to be he's going to stay put there. So I don't know how lucky that was. Oh, this is the wait. I mean, once. Oh, only want to show today. There we go. I was like, that's not what we did today. Cool. Vegans will not take over. Yeah, I was like, this is all a conspiracy theory organized by the vegan lobby. What did the Fed say about lower rates? That has always been the key. Cheap borrowing equals more money for those companies at the expense of savers and bondholders. Yeah, it's true. But I'm not so concerned about the rates being low. I mean, look, low rates hurt some people. It was like he was saying in the press conference. Low rates help some people and they hurt some people. And the Federal Reserve has to do what is in line with its mandate, which is maximum employment and price stability. And if they hadn't have reduced the interest rates, then we would probably be suffering from a deflationary spiral right now. So they had to reduce rates. But what concerns me is the amount of monetary stimulus that's going into this economy. Frankly, if we're able to make it back to 3,000 here, then, and assuming that it's not just a bubble that deflates all the way back down, then I think that the conclusion should be that we stimulated the economy too much. And there are probably significant bad repercussions if you overdo the monetary stimulus. Prop up companies, you'll end up propping up weak companies that shouldn't be around. And as Gary is pointing out, you give more money to the rich. Of course, any of us could be long in here. In the E-mini, that is. I don't know. Maybe they're just doing it to squeeze out old Jeff. I'm telling you, man. I agree with them, but when I look at the price action, I have to say, like, how can you short here? And I think that being the bond king is a curse. I don't want to be the bond king. It's cursed, I'm telling you. The cursed throne. Bond guys front ran the curve ahead of what was to come. Yes. They lean on this, forcing the Fed to react and become proactive when the 10-year broke key levels of 2%. It was a tell. Oh, right. Well, the thing is that Federal Reserve policy on interest rates in particular is so predictable that the market pretty much already knows what it's going to do before the Federal Reserve does. I think that's the thing. It's not like probably does happen too, but I really don't think that it's the bank has some inside guy that says, yeah, the Reserve is leaning on doing an emergency. No, I think that they do their calculations and they say, oh, well, the Fed's going to have to cut, and they know it before the Fed does. But this monetary stimulus, that's not theirs. Exclusive. Chesapeake Energy Corporation preparing for potential bankruptcy filing, says sources. Gary Rich agrees with me. I'm glad that we're agreed. Hey, Gary, by the way, because we were going back and forth yesterday, just think about it. But because you know how I had John on the other day, and he was kind of coaching me a little bit. You would be more than welcome to get on, and we could do it through Discord, or we could do it through a team viewer meeting, and you could share your screen if you want to, or you can just talk and tell me, and I will 100% just listen. because I might be right about some things and wrong about some things, but I am more interested in learning what you know, because you certainly have shared with us some. And especially this VIX thing, I have to say, it is so effective. I've never seen anything. I've never seen an edge even close to this. Literally from the open, know almost exactly where it's going to close or what the high of the day is going to be. It's amazing. It's absolutely amazing. So think about that. If you'd be willing to come on and talk. I know it's like a scary thing, but it's really not. There's only like a dozen people and nobody remembers what you say or do anyways. Got about 12 minutes left. Then we'll shut it down. I'm not, probably should stay and see how the market reacts to the earnings, but I'm sure that they'll move up and do crazy stuff and everything. I need to get back to work after this. Lunch is over now. Interesting. Alberta Investment Management Corporation blew up exactly the way described in Chapter 3, Better Convex Than Right. This is Nassim Taleb. Wow. The nitwit here, check. You may have heard about the blunder at Alberta Investment Management Corporations. These nitwits were selling unhedged variance swaps and took a $4 billion loss in March on pension money. Oh my. On pension money. If you appear on camera, would you please bring your border collie? Gary asks Win. That would be cool too. Great camera. But not to change the subject, but I am shocked that you got these guys on the news that the news network doesn't have better camera equipment for them. Sure, the VIX thing is a good thing for all. Please share with whomever you like and take credit. Well, did you hear? I made it so that everybody could view it, and they took it down because I referenced you and the YouTube channel in it, but I put it back up, and I think we're okay now. So I have it up there. I'm really wondering. I feel conflicted because I kind of want to get Rhythmic back, but I also kind of like the tick. I haven't really used the tick much, but today it did give me one. Okay, so there are the market on close orders selling. Cool. No big deal. In fact, maybe if you really wanted to do something crazy, you could maybe buy it right there. Why not? Oh, 1,000 traded at 29.39. Anyways, what was I saying? Oh yeah. So the tick has been useful. Not some of you guys were saying, "Oh man, if you use the tick, you're just going to win all the time." And I'm not quite sure I see how it's that useful. But maybe you guys need to teach me more about it. I would like to get the VIX, and I think I have to stay on CQG to get that, right? But I want to get Rhythmic so that I can get the MO, whatever we call it. See the individual orders in the queue. Ooh, and try and detect stop orders. Oh my gosh. If we can detect stop orders, that would be so, like, I can just sit here on the E-mini, know which, because sometimes we really have a really good idea of which direction the trend is, but we can't find a safe spot. So if we really know which way the trend is, just wait for a stop run and get in on that. And if you know it's for sure that it was all just stops, like, man. Oh, look. The 10-year treasury came down and tagged us and moved back up. I'm so lucky. I'm so lucky. Okay, well, Gary, maybe we could do it on Friday. I think Fridays is a good time to do it. So maybe send me a message on Discord. And we could talk about how to do it. I'll look at him go. Take all the credit for it. I don't need to be referenced if it grows your channel. That's a great thing. Yeah, cool. Although, you know what though? Well, first of all, TradingView apparently is like really sensitive about if you promote your anything outside of TradingView within the description of it. So like, okay. But the other thing is like I've been doing pretty well with it. Like it's helped me figure out how far I can try and let things run, even though I can't really take the risk to hold against a whole full swing to catch it. But there have been other people on the channel that have and have made a lot of money and really are really grateful. So thanks again. It's a great edge. And it's so funny. It's like it's something that I kind of knew that the VIX is predicting how much the S&P 500 will move, but I don't know why I never thought to make a calculation like that, US CDC reports total cases above 1 million now. And the death toll is over 60,000. That is a really bad flu season. I think we're past a really bad flu season now. If deaths get to 100,000, 200,000, at what point do you think deaths get with coronavirus where people start to really be like shell-shocked by it, I got about 8 minutes. Gold remains at session highs after move up on FOMC decision. Oh my gosh, so I gotta tell you something else. Maybe Win will enjoy this. So my wife has been making masks for everybody, and she's been selling them, and she was like, well, okay, so I made this many and this many, and she's like, I made 30 from this, and I made 30 of these, and I'm like, wait, 30? You're selling them at $5 a pop? Like that's like $300. Not $300. It's like $150. Like, are you kidding me? And then what happens is the governor in Utah makes a deal with some local manufacturers. They're going to give everybody in Utah a mask. So you can order and they'll send you 6 masks. Mask for every Utahn. So darn government picking winners and losers just killed my wife's independent business in its infancy. She's not too stressed about it, but I'm a little unhappy because I'm like, wow, she did great with it. Maybe Fauci had his models off 2.2 million cases, not deaths. Oh, I don't know, man. Like the thing that wilds me out is that we really don't know. Like, it seems to me like the death rate is spot 5%. That's the one thing that I feel really confident about. And how many people catch it overall is, I don't know. But it seems to me that the death rate should be spot 5. Gee whiz, maybe she should write her congressman and complain, get a small contract or grant for her masks, right? Well, I'll tell you what it is we need to have more connections with the governor. We need to have more, I've done the politics. None of the politicians that I've worked with have become a governor. If Lieutenant Governor Cox, who I really don't like, by the way, really ends up being a governor, maybe I need to kiss up to him now so that next time that we're starting a small business, he will give us the goodie. He'll give us the contract to make and then my wife can figure out how to make, 1 million masks. Oh man. Like, think about it, how much money they're making off of that. It is not a small sum. I'll tell you that much. Even if they're making them for cheap. We've been talking about it. And I'm telling her that we need to move into the luxury mask market. Call Mitt. Y'all have more in common. I avoid Mitt. Yeah, I mean, I've been around him a little bit when they're at events and stuff. And I know the guys, like they're I don't know what their deal is, but there's these young kids and they're like maybe just out of high school, and they're like missionaries, they look like missionaries there. I got nice haircuts, and they're just like way too happy to be there. And I see them scouting out an area, and I'm like, uh-oh, Mitt's coming. Mitt's coming. And I get out of there because I just don't want to deal with the crowd with that guy brings around him in Utah. It is, and it's not all a peaceful crowd. There's a lot of people really don't like him right now. But it's like I don't even want to deal with it. No thanks. No thanks. Follow Pence no need for a man. Yeah. No. We're just gonna if everybody's gonna buy masks, they're all gonna have these masks provided by the government. Then we're just gonna go into the luxury mask market. So you want nicer material. Maybe I'm telling she has pockets on them so that you can put a filter in it, so that it actually is like if you get the right kind of filter, which she does have now, it actually will protect you. Like it actually does have a good chance of protecting you. And yeah, but I've seen these ones where there's like a little hole with so that you can breathe more easily. I think that's what we need. We need to make masks like that now. That's probably the way forward. And what's Nate Silver saying? 2 things about Sweden's data. Number 1, it has a lot of fatalities. I don't buy the other places, e.g. Italy, have been worse. Take Sweden's death rate per capita is 6 to 7 times that of Norway and Finland, and 3 times that of Denmark. However, it also increasingly seems that their numbers are leveling off, especially in Stockholm, which is what you would expect if 30% of the population has had it there, as their ambassador claims, providing some herd immunity. Here is their ICU data. I am seeing commercials where they put copper into the mask insert. Copper. To dazzle the mask. High end. Exactly. Now we got cool patterns and stuff. We got cool patterns. When I go to the store, everybody looks at me and like, "Ooh, where did you get those?" She was able to sell a lot of them for a reason. They were nice. And she was pretty proud. She was showing me her craftsmanship. She was like showing me how well she's making them now and stuff. I was really impressed. Okay, here's the close. 29. So let's call it 29.30. So they came back from that target. Good 15 points. Okay, well. Fun day. I'm glad that treasury trade worked out, but it was probably luck because, man, look at that. It came back up like that. Yeah, we got lucky. Or maybe somebody's looking out for me in the treasuries. I don't know. If you were looking out for me in the treasuries and you, that's a lot of liquidity to save me on a sim trade. But hey, thank you. Anyways, I'll see you guys tomorrow. Stay profitable.